Hello and welcome to the Gold Goats and Guns podcast for March 4th, 2025. My name is Tom Luongo. We have a lot to talk about. It is episode 208. I have with me the great pleasure of having yet another chat with my good friend Chris Sullivan of Hyperion Decimus. Chris, how are you?
I am spec-frickin-tacular, man.
Oh, that's good. I mean, every day is a new day in Trump's new America, and it seems to get almost better. I want to say almost better every day. So how are you enjoying the beginning of season 2 of the Trump show, Chris?
I'm pleasantly surprised. Like, it's rare that we as humans get to experience an upside surprise.
Right.
But I think the collective of talent plus the pedal to the metal on bam, 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 we're doing stuff, we're executing. I'm just really impressed at the quality of the work, the progression, and then you always balance out, all right, how are those who are, incumbents, oligarchs, globalists, whatever we call them, reacting to it? The more extreme and whiny they get, then the more conscious I am that it is the right pathway. So I'm pleasantly surprised.
Yeah.
And I also I'm not able to interpret how people are so bipolar with this, right? Like,
bipolar is a good word, by the way.
It's just confounding. We can chalk that up to an infinity of inputs, whether it's cortisol levels from screen times, or it's memory, or it's it's every input.
Sure.
In some, but all that I'm seeing is good.
Right. It is funny. Being where I am situated, which is just north of, basically shitlib central up in Gainesville, Florida. And then having a couple of friends locally, who are, for lack of a better term, our people. And then every once in a while I go and I interact with my old friends and the normies in that, what is normal for Gainesville. And I'm telling you, they have no idea what's going on. And I was talking about this on Twitter this afternoon, and I had a run-in over the weekend where I went to a going away party for a friend of mine who's gay and is leaving the country because he's worried about Trump, Musk, and all of this bullshit. And that's fine. I think he's making the wrong decision, but he's going to do what he's going to do. And while there, I got reminded really quickly. Well, okay, I understood now where he came from, and then I understood I looked around at all the people, and then it's just a simple little conversation about what was happening with Doge and Trump, and what they're doing. And the person who I was talking with, another vaguely conservative friend of mine, and there's another person out there. I was out front smoking a cigar, and we were chatting, and he was there, and this other guy was there, and I knew him from my gaming group and everything, and then he has to interject, of course. Well, you don't really believe that, they're going to find any real fraud, or do you believe this Doge shit is anything important? And I'm like, yeah, like a bunch of 19-year-olds with laptops were really being able to do this. I'm like, since the whole U.S. government runs on like ancient AS400s, yeah, I do believe that, especially if they knew what to do and had pre-programmed all the laptops and then let the AI algorithms do their thing. I think yes, I do. And I couldn't even get him in the conversation. Only got worse from there, but I couldn't even get him to admit that, or to the minute I said, well, maybe we should stop, taxing people for the fourth time for their Social Security. Right. He couldn't even work with that. Forget everything else. I'm like, okay, well, fine. If you think that, it's going to cost more money to track down the fraud than it was going to, then it's going to save us, you can believe that. I'll even give you that. Not that I believe that at all, but the idea that it was right and proper to tax 70-year-olds eating cat food on Social Security, and have them have to file an income tax. And God forbid that they made more than $8,000, then they would actually owe the government income tax. Do you understand how that's fundamentally wrong?
Yeah.
And he left the room. He was like, well, this used to be fun out here. I'm going back inside. And he left the party out. He was out front because he didn't want to deal with the noise. He couldn't even have that conversation. And he went back into the noise. I'm like, enjoy. I realized at that moment that my decision to move to Tennessee, which is, in process and it's going to unfortunately take longer than I would like it to, was exactly the right decision. I have no one left here to talk to. I have no friends locally really anymore. It's
I'm
amazing.
only a few hours away, but
True.
I I think first off, you're not wrong, but the sort of the bleeding heart component of me, because I can have like a chameleon have a plethora of emotional responses, right?
Mm-hmm.
The empath or sympathy card that gets jerked when people can't process, can't debate, don't want to engage, and can't. Tom, I love you. I disagree with you, but I'm curious. Why do you think that, Tom?
Right.
How did you come to that conclusion? What happened to inquisitiveness, rigorous thought sharing, and debate? I mean, I just don't honestly, and I'm not that complex of a human, right? But I don't fully grasp the the causation and magnitude from a correlation standpoint. Like, yes,
Right.
there's lots of bad vectors of information.
Sure.
Great. Yep. Yeah, there's health, wealth, and all kinds of other issues. Sure. But that shouldn't prevent people from processing syntax, essentially.
Look, if you spend Chris, if you spend your entire life on Reddit and you think you're smart because you spend your entire life on Reddit and you get your talking points from third hand from Emily's List, which is the Democrats, talking point generation engine that filter through Reddit and they filter through the Daily Show and they filter through all of these trusted media sources. And it's the same, and they're all saying the same course. But the problem is people don't even realize they're being programmed, and they
Mhm.
think they're. And this is the funny part is they think that they're with it and above it all. One of the interesting things that's really been fascinating for me, and I know we want to talk about the financial markets and stuff today, and that's what you and I are going to get into, but in a minute. But before we get there, because in order to understand how financial markets react to policy changes, we have to understand the psychology of the people who are actually operating in the markets, right? And their psychology is a little, well, for lack of a better term, fucked. And um, when you realize that everybody's being programmed and they don't realize they've been programmed and they don't understand that the triggers that have been installed in them were put there in order to have them pushed at particular moments in time, it's a little that's the biggest problem, right? And then okay, so I guess maybe the counter argument would be, well, Tom, how do you know you're not programmed? I'm like, I know I'm programmed. The difference is I admit it. Like, I
Mhm.
know I'm programmed. And I know that I spend every day trying to unprogram myself. But my tribe was the one that said, you know what? It's all bullshit. The Republicans are full of shit. The Democrats are full of shit. The globalists are full of shit. The corporatists are full of shit. The anti-corporatists are full of shit. I distrust but verify everyone.
Yes.
You trust someone, right? And I only now have come to trust or come to learn to stop worrying and trust a little bit of Donald Trump and or Elon Musk because now they're delivering goods in ways that I had been bitching for decades.
Mhm. And you've been ringing the bell on that for decades.
Mm-hmm.
And what, from a quant perspective, to be a agnostic specialist, right? Well,
Mm-hmm.
for 4 years slash at least since 2008, probably before that, the data has been false and manipulated and skewed. So, like, even from, if I'm just a evidentiary statistical analyst, right? I
Correct.
am screwed because my basis of inputs are false or flawed or both, right? And so I think that's part and parcel to the psychological. They go hand in hand. If we're dealing with false data, we're going to have false emotions. If we're dealing with false emotions, we're going to have false markets. Sorry,
Yep.
folks, that's just the way the cookie crumbles.
Right.
And you know why I mean, I'm always fired up, Tom, but I'm fired up because of the challenge, right, to rise to the occasion, to evolve and to process, right? So that like puts my team's skill sets and mine to work in a very
Yep.
fun, somewhat wanderlust, exploratory, and precision based way. But
Mm.
it's really, man, if you don't know, you know nothing, and you don't accept that you've been pre-programmed and poisoned at all by blah 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 blah, and then start from there to just try and make sense of it all, you're just not going to have any fun with it, and you're not going to arrive at anywhere productive.
No, I agree completely, Chris. It's funny, and you know, I don't know. I always sought out as a, I mean, I've told these stories before, and I'll just to remind everybody that, I started out, the first serious literature, I ever started reading was Philip K. Dick, and who literally had to teach you, who taught you how to distrust literally reality itself. Right.
Mhm.
And, I've quoted Phil 1,000 times. And not the least of which is, a speech he gave a long time ago, explaining the process of dehumanization and how people turn into fake people with fake markets. And he talked about all this in qualitative terms back in the 1970s. And then wrote whole books about it, and his entire canons about it. And now we're literally here we are in 2025, and Davos and all these people thought that that was a handbook as opposed to a warning signal, right? Like
It
this is an
really was.
operating manual to these fucking people, as opposed to the warning that it was meant to be, and that we have to we have to reject all of that and move ourselves back into a state of something, whatever our personal definition of grace actually is. And so,
Mhm.
with that in mind, let's talk about our fake capital markets, because right now they're kind of hilarious.
It's really confounding.
Yeah.
Not so much because really, like, and you know this, I operate from one position and one position only. Price is the arbiter of truth. All right. And
Mm-hmm.
if we know that, then we also know that price leads narrative, not the other way around. But I forgive investors and or observers for being pre-programmed and conditioned to think the opposite, because all they see, whether it's Bloomberg, CNBC, Fox Business, Wall Street Journal, yada, 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 is
Mm-hmm.
markets down because blah.
Right.
Well, it's just not the way it works, folks. They know that's not the way it works, and they are programming a reaction into you and then using the illusion of a balance sheet in your portfolio as a weapon against you. That's
Mm.
all it ever was, right? And the story of panic and bust is so much more gnarly if we examine, the 1907, 1814, all of those, everybody lost everything. And then you know this from 1933 when the rich people lost their money on that bank holiday, when they made
Mm-hmm.
gold, when they shut down 1,100 banks and all the millionaires lost their deposits, right? Like
Right.
could you imagine that occurring to this week of a populace, Tom?
It would be catastrophic. But this is what Davos has been planning, like in Europe, and they kind of wanted to plan to do the same thing the rest of the world, but it's not going to happen. Clearly,
No.
we're in a different timeline now, and that timeline is one where Donald Trump lived, and now we get to fix the world.
And
Um,
funny you mentioned timeline because it's going faster now too.
mhm,
And the woo-woo people will get what I mean by that. Like
mhm,
that's
mhm.
really impressive. And again, just an observer of data. Um, but I think what I could walk through for people to just calm down a little bit is just a combination of a reflection on kind of the macro, understanding, okay, here's where we are in the present. What is the max bull euphoric case? What's the max bear end of the world case? And then
Mm.
how do we articulate and design an investment policy and a trading plan that can survive, conform, and evolve to either of those conditions?
Before we go there, though, I want to say your point about markets get there first, price leads understanding,
Correct.
or in a zeitgeist sense, I think is an important one, because um, it's a classic post Proctor Hoc problem, right? Where they need to write a headline, they need to explain what happened because everybody else is not watching the markets, and they're going to work every day, and then at the end of the day they come home, they read the newspaper, and they got to have a headline to write,
Mhm.
and then we go from there. And this is and it's creating this kind of this post hoc causal link to something that they have no idea about. Martin Armstrong has been banging his shoe on the table for decades, trying to explain and teach us all that markets move, and they don't necessarily move for any particular reason on that particular day,
Mhm.
unless you can read all of the markets that bear on that particular market. So when you look at
Right.
the Dow, for example, why did the Dow go down 600 points? It could be for 100 different reasons.
What I found leads people to maybe better truth is, instead of asking why, ask how, because that's a mechanical question.
Mm-hmm.
Or
Excellent.
excuse me, that's a mechanical response to that question. And
Right.
I even do this with, you know, even my father, but now I've trained him to where he knows better. But people want this illusion, and it falls under your standard Carl Jung psychological categories, right? Of all the problems with people's own psychoses. But
Right.
in reality, the modern version of that, since that's now quite a few decades old, the modern version has basically created a psychological whipsaw that is more violent and more extreme than price whipsaws. And
Mm-hmm.
that I'm just kind of confounded, because I'm 43 years old. I've been doing this now 20 years, which is scary, Tom.
Mm-hmm.
I hate admitting being old. And I've come from, the investors the investors I knew and worked with as a young man at Morgan Stanley, I still know, right?
Right.
And they were not like this then, right? You always had your smart money, you had your sharks, you had your event-driven guys, you had your arb guys, you had your mean reversion guys, and there was
Mm-hmm.
just always an investor trading, right? And
Mm-hmm.
and despite, this is the other thing I want to tell your audience, that they're trying to, the media is trying to pre-program you that, oh well, 80% of the market's algorithmic and AI, blah 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 blah, and therefore it's more sensitive to this bullshit. And wrong. There's no data that supports that. Like,
Okay.
despite the algos being proactive, predictive, or reactive, where the majority of them are going to be predictive, which is not going to like puke or rip on silly little news headlines, right?
Right.
Because that's how smart money actually works. They do linear based models or multi-factor models that are predictive, not reactive.
Right.
And since we understand that, then we can kind of understand, well, that's why I am now subject to overreaction to these minor deltas in price movement, right? Like literally, here I'll start showing you charts. Like, let's just do the Qs, right? Which people have just weirdly freaked out about. And since you know charts and quant very well, I'm going to share this.
Right. What you mean by, what you mean by that is the Nasdaq, the
Yeah, this is
QQQ.
NASDAQ 100.
Right.
Is that nice, pretty ABC 200-day test, oversold conditions, and then big reversal on big volume? Is that even worth noting, Tom? Look at how small that is.
Yeah. No, it's not even interesting.
All right, let's back up. That's 1 year. Let's back up to 5 year. Oh, look at that trend
Yeah,
intact.
exactly.
Whee!
Exactly.
Oversold on 5 year. Again, not even worth noting, because wait, so I'm pretty sure we all are trying to convert fiat to assets. Am I trying to
That's a
pay?
that's a big assumption, Chris. I hate to tell you that, but okay, go ahead.
But theoretically, if we care about markets, what we're
Sure.
trying to do is build a portfolio, have assets, hopefully segmented by strategy, like cash flow, asset protection, accumulation, et
Right.
cetera. Um, and just like a meal or a shirt or gasoline, I don't want to overpay for
Sure.
those assets. So I thought my default setting was just the old Buffett: be fearful when others are greedy, and greedy when others are fearful. I don't see anybody doing that.
No.
So forgive the hyperbole, but right here, because this is a 5 year chart, we can visually see that if this does break this trend line, all right,
Mm-hmm.
we then got to go to, what are our confluence areas, and what is that? You see my cursor coming over
Yeah,
this
yeah.
price action, right? Well, okay, that's a target. So that's basically another 15-point decline from here. Well, it's not really that probable to be able to do that, at least without bouncing first, because we've already got kind of extremely oversold conditions.
Yep.
And then when we look under the hood, all right, MicroStrategy's down 59%, Coinbase down what, at 40. I mean, even let's look at AMD, right? Advanced Micro,
Right.
pummeled. What?
Yeah.
So that's 227 to a low of 96.61.
Mm-hmm.
That is Oh, and then by the way, let's throw the fib up. Watch, it's gonna coincide with the percent retracement. It's gonna be
Right.
beautiful.
Yep.
Oh, look at that.
Yep.
So it still could go a little further, but you've got end to end my 618, right? So the point of sharing this is not to like scold or do anything other than inform, because you can't just look at one factor.
No.
You've got to take in many different price signals. And to everybody's place, oh well, Tom, I'm going to hide out in treasuries because it's 4.35. Oh, really, Tom? Let me show you dollar.
Yep.
Okay, let's go to the 1 year. Guess what, buddy? You just lost that much on a year-to-date basis sitting in dollars.
Yep. Yep.
And see, it's right to the 50 fib, basically, right?
Yep.
So, all right, so why do I have a DXY input? Because where currencies are at affect everything from rates, which then affect flows, which also affect valuations.
Yep.
And I think that's a good segue into I know I just diatribe. So that's a good segue into looking at gold or Bitcoin, et cetera. But I think just walking through that exercise of, okay, what's in the NASDAQ? Let's look at some of the big names in it. Holy crap. All right, worst case for it is potentially another 15 or 20. Best case is corrections done. All right, but now we got to examine the dollar because that's our input for what we're converting into fiat, or excuse me, into assets.
Right. So, well, as you know, we talk about this stuff all the time, that, you know, it's one thing to look at the nominal value of things. So look at nominal GDP or the nominal price of oil and everything. You forget that when you're looking at something, as you just pointed out, and this is very important to wrap up Chris's point, there's always a hidden denominator in there, folks. When you talk about, you know, for example, foreign stocks, it's like I can show you a chart of a foreign stock, for example, that's doing very well, and then I can show you the currency, and I can show you the currency falling versus the dollar, and then you say to yourself, and show it to you in local currency, and go, look, this chart is blowing out. Then look at the ADR, which is the American Depository Receipt of the same company, or convert that index into dollars and then do the conversion, and then you realize that the stock's actually in a bear market. And when relative to you now, if for example it's a Brazilian company and you know you're Brazilian, then you care about the value of it in Brazilian real. But if you're an American, you know, I mean, I was doing this exact same exercise the other day for Petrobras, and you know, and Petrobras is a stock that in dollars has been getting crushed. Why? Because the Brazilian real has been getting crushed. It's not because Petrobras's earnings are bad, or because they're not paying dividends, or because they're not this, or they're not producing oil and selling it for obscene profit and all the rest of it. But in dollars, because the Brazilian real has lost like 60% versus the US dollar since Powell started raising interest rates. Like that's most of the drop in Petrobras from a high of around 19 to the current price of around 12 or 13. And what are you going to do? Same thing with Vail. Same thing with any number of
here's Volley. Yeah. And then, oh, by the way, you're getting giant dividends. I actually like both those names. And Vale is trying to form like kind of the beginnings of a inverse Head and Shoulders here after doing a full gigantic retracement.
But you also know, Chris, that I disparage all chart art because other than really long-term trend lines, I'm not a big fan. But you also know, I just say, well, you know, if you need a formation, move farther out in time, and then look for a relatively short signal in terms of number of candles, and then analyze those candles. That's generally the way I do it. I stay away from, you know, me personally, you and I have different systems, and that's fine. Everybody has a different system.
No, I have all systems.
Yeah. Okay.
I have all systems.
All right.
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 And this is a process and cadence I've learned over time. You can't like chart art, or like here's a great two examples of chart art, right? And you know both of these. One is the old school Dow theory, right? And that's a difference between transport and Dow non-confirmation or confirmation, right? And then it worked forever until it didn't. And you can, there's many inputs to how, why that may or may not have changed. It might come back. We don't know. And that's the humble statistician and data analyst way to look at it. On on Elliott Wave. That's another great example, right? Because why Elliott Wave is good is there's only so many ways price can subdivide, and impulse in the direction of the longer term trend tends to have this set of patterns and subdivisions and fractals, and then a counter trend move has this set. But and that's basically all you get to work with. There's no exact science because humans aren't exact,
No,
right?
there is no exact science. What we're both saying here in different ways is that markets are probabilistic. They're not
Correct.
deterministic. And and for me, having traded Elliott Wave, having traded moving averages, RSI, MACD, Fibonacci retracements, all of it, every once in a while, I'll throw one of them up there. I look at them and I go, until I can back test and say I've got a tradable edge that's greater than a coin flip. I'm not, and I can back that up with really hard data that is not that's just pure price. As far as I'm concerned, that's all we really. That's to me the most. That's the closest thing to a predictive system that you can have, or one that's going to give you the best set of probabilities. As an old data guy, going back to when I used to have to
Well,
like.
you're not wrong because if you ask me, hey, Chris, in your hedge fund, what are you guys using for your algo logic? None of what I just showed you is in there.
Okay, fair enough. That's thank you, Chris.
Yeah.
This podcast is now over. You just confirmed that Tom was right. Okay, we can now move.
Yeah, yeah. Well, your instincts are good. Yeah. And like, but we have to just observe what we can observe, right?
Mm-hmm.
And then, my alpha and edge in terms of the logic side has come over, years of design. And then obviously you can have things like self-evolve. And I'm not talking about silly AI, but a lot of what people don't understand that matters is market structure and order book data, right? And then monetary flows and the signals that come from macro,
Yes.
right? So all we take into account all of those. You run analysis on what has alpha, what's not. You overweight, underweight. It's a wonderful thing for people to understand, but I don't recommend doing it because it is a hell of a mind f.
Yeah. Well, again, I want to go back to something you said earlier, which was really important, which was that not why did this happen, but how did it happen is
Right.
far more instructive ultimately. Mm-hmm. And this is where I've gotten to over the course of time in trying to go, okay, how could a move like that happen? Which is invariably the question I really ask myself when I'm putting together the charts for the market reports that I know you're a subscriber to. I know that, how do I ask those questions? How could this move happen? Not why did it happen? How? And when I made that shift conceptually from the first question, which was why, to how, and I started adding in all the things that are quote unquote non-market based, all of a sudden my ability to look at probabilities and understand the milieu in which the asset under study was operating, then I could start to go, okay, I'm seeing this, and this because I think this is most likely what's going on. We're getting central bank policy is doing this. The market is reacting here or there, but it's none of this like, oh, the world is worried about tariffs, so everybody's repatriating their gold out of the LBMA. I'm like, no, that's not what's going on. There's far more. There's like 700 other reasons why. And generally speaking, whatever Bloomberg is telling you that the reason is, it's probably the wrong one.
Right. It's misdirection. Right. I mean, and that there's 60 million ounces of delta on the paper versus the spot. Like that's the only issue, basically.
Exactly.
Is that and I don't even care if they're listening. You guys are fraudster, lying criminals across all globalist central banking, blah, 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 oligarchy, fascists, bullshit. And they keep calling Trump a fascist when they are the definition of fascism.
I agreed.
And I don't have to be a fan of anything other than the truth, wisdom, and light to appraise facts. The facts are you guys have lied for 114 years consecutively about literally everything. And I'm going from the genesis of the third central bank in the United States. And then, yes, it's all out of the Bank of England, right? Which is modeled after the first central bank, which was out of the Netherlands, 16th century, as you recall. And the LBMA, like I know you can recall this. What did they do to the nickel market a few years ago, Tom?
The which market?
The nickel market.
Oh yeah, the nickel market. They froze it, and then then they went back and said, well, we have to reverse all these trades.
Who lost there? Right.
I
And
don't
then who benefited?
I don't quite remember who they were actually.
I can tell you.
Okay,
because the commitment of traders data separates it, right? You've actually got bona fide commercial hedgers in some of that mix, right? Less than 30%. The lion's share of the volume that's not LBMA or bullion bank related is trend following hedge funds, right? So literally they took from either high net worth family office or institutions from other institutions to ensure their banking cartel was not bankrupted. Did the producers benefit? No, because what happened when the nickel price jammed down 34% the next day that it opened? Oh shit, well, anybody selling nickel just lost money. So they care not who they affect. And this is never not going to be the case. That's why I don't understand how, classical liberals at least can jive with this sort of leftist quasi-commie Davos agenda, UN agenda, transhumanist, and blah, 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 and number of other adjectives and adverbs you want to call them, like they're doing God's work, social justice warrior 8.0. Like no, they're evil, lying, crazy people.
Yes.
Period.
Yes.
End story.
Yeah, absolutely. And no lie, once you understand that, then you can start to understand the incentive structure of those who actually control the flow of capital itself and where it comes from. So obviously, as you just alluded to, the central banks and everything else. And then you can start to build a model of action of how certain things can occur. And then you can start doing some real back tests on the big turns in markets, specifically markets that they care about the most, and figure out. And then your job as an analyst, or in your case, a portfolio manager, or in my case, as an analyst and commentator, is to take that theory of that the theory on which that model is based, theory that they're all lying power hungry bastards who are trying to take over the world and make us all eat bugs. Okay, fine. Okay, that's my theory. That's my hypothesis. Okay, now let me see, how would they act in the marketplace? How would they act at the policy level? How would they manipulate the price of particular assets and the assets that everybody cares about? Certainly, how about the assets that are the collateral for the entire financial system? And once you start to build that model up, I've said many times, like, I never wanted to be a bond spread guy. I never wanted to be a currency guy. I wanted to sit and talk about freaking gold and just stack the shit in the corner and piss off about the government. And guess what? It wasn't good enough. It wasn't good enough. I had to get better at things that I had no interest. I literally had zero interest in. But if it was either that or, go find a different job, digging ditches or some shit, because it's not like I'm going to make it as a male model. Like, you know what I mean? Like,
there's a market for everything, right, Tom?
Old, bald, fat guys modeling fucking jeans is not one of them.
Okay. Hey,
standing on street corners going, hey, baby, come on. Like,
maybe in
Davos, baby, with my cigar. Like, okay, that sounds great. Let's do that. Like, yeah, I'll make
maybe in Davos you could do that. So,
Chris, I thought you said you loved me, dude. Like,
I'm kidding.
I know you. I know, of course.
But you're not wrong. And like, as the globalization and dare I say, egregious hyperbolic financialization,
bingo,
has occurred, your historical confluences of both indicators and factors have expanded and then have a idiosyncratic complexity that is extremely hard to fathom.
Yes.
Right.
Yes.
And then, okay, here, let's add in these kind of ad hoc observations, which are, wait a minute, there's more ETFs than there are stocks. Okay, but these ETFs are tracking indices that don't own the stocks? Wait a minute, Tom. What the hell? Well, how does that price? I don't know. What's a create redeem process? Oh shit, I don't know that either. Right. Or high yield spreads over Treasury matter? Why? Wait, and positioning who's short because there's one, big spread that everybody uses for hedging, and it's financialized instrument. All of this nuanced, idiosyncratic data, factors, and financial instruments all affect the whole infinity daisy chain.
Right. Right. And that, but at the end, but you see, at the end of that daisy chain, there has to be an original pile of collateral. This is, I
Oh,
think,
at least
this is,
allegedly, yes. Yeah.
well, no, I mean, what I mean, and that collateral is our labor, the oil inputs, like the basic energy and commodity inputs that go into these things. At the end of the day, when they're not there, you can play the daisy chain game for as long as you want. But at the end of the day, if you don't have the collateral, because and when the daisy chain starts to break, then the whole pile of derivative instruments starts to break as well, and then that's when the markets blow up. This is part of how they've made the system more fragile as opposed to less fragile, right? It's become less anti-fragile to use Talib's nomenclature.
So you're telling me we need a proof of work algorithm?
Well, yeah, I know you're a Bitcoin guy, and so am I.
Well,
No,
I'm a truth guy.
right, of course. And Bitcoin is one of the potential arbiters of truth that we have out there. And
Well,
again, like a gold market where there's a segment. You see, the thing is I think just to interject for just a second, and then you go crazy. One of the things that the Bitcoin guys will argue, correct me if I'm wrong, but about Bitcoin versus gold is that gold is compromised. And we've had the conversation many times, not just me and you, but the world, about the structure of the gold market being compromised in this environment, which is why an asset like Bitcoin had to show up, right? Because we have bifurcation between paper gold and actual collateralized gold.
Which even that is obviously showing its teeth now too, right?
Right. Well, that's actually what I was alluding to, which is that what if we wind up in a future gold market? What does Bitcoin look like in a world where, or what's its role in a world where we can literally segment properly the physical gold market and people using it as a store of value and a unit of account versus the speculative hedging against currency risk role that gold also plays and Bitcoin plays to a lesser extent. Those two things need to be separated. Those are two separate products. If we are we may be moving towards a world where we are able to get that again, because those two roles were conflated during the 1980s, 1990s, aughts, and up until about, well, I don't know, about 3 weeks ago, to be honest with you. That's what we're in the process of starting to find out. And that's what the old gold guys like me have been arguing for forever. But it's part of the reason why I also immediately glommed onto Bitcoin, because I realized that Bitcoin could then begin to serve, if it was adopted, as another pressure release valve for those seeking real asset, real hard assets.
I think that's like you open Pandora's box on that, because let's just tackle gold, because like you, gold, being a gold bug or sound money or a Austrian or a fan of the good Dr. Ron, who, imagine how frustrated that poor guy feels. For literally his entire life, he's been telling truth and giving us pathways and solutions, laying it out in a very kind and gentle way, and nobody listened and believed him. I love him to death. I hope that they have him audit the Fed. I think he would die a peaceful man if they let him do that. And honestly, I think
having met Ron Paul, I'll tell you, he's going to die a peaceful man anyway, because he's right. His attitude towards this has always been the right one, which is, I'm going to tell you the truth, and that's what satisfies me. And I'm right, and his soul is right with the world. I don't, with the universe. I don't think he's gonna,
I think I was coming from a place that the American constituency owes him, right? And I'd love to see it, because he could have done such wonders for us that would have or could have prevented a lot of the issues we have today. But
agreed.
With as a historian, with gold, people always are looking for this one size fits all solution for economics, worries, wealth building, etc. Right? Okay, well, Tom, yeah, I like gold too. It serves many functions. It adds value to many aspects of portfolio construction and wealth building. But guess what, dude? It didn't prevent any of the crap we've seen throughout all history.
No, It didn't.
And guess what the central problem was of each of those issues, whether it was the coinage crisis of the 1600s in England that made John Locke famous, or it's the 70s. What was a
Right.
common theme? Humans.
Yep.
Humans.
Yeah.
Gold's not bad. Humans are. So I'm with everybody on the sound money thesis, but just by anchoring fiat to gold, that doesn't resolve or solve that, right?
No, it doesn't. Martin Armstrong has also been making this point for a very,
He's
very long time.
fantastic, by the way, and he's one of the most sophisticated computer model guys on earth still.
Mhm.
And people should listen to what that guy has to say. He always comes from a place of humility, of observation, and
Yeah.
of data.
Mhm.
Never is it really too subjective, and so I'm a huge fan of him as well. But I think what we should be having in dialogue is not Bitcoin or gold.
No.
It's both. And why? Both offer different attributes that I find accretive. And I could be wrong. I'm not saying I'm right, but right, like you've got the metallurgy side of, or tangible side. Now I can print out an analog QR and have tangible Bitcoin too. But anywho, you've just got mutually beneficial attributes that they both have to be in your portfolio. And where Bitcoin has gold beat all day is that, here, I'll show you. I can have nearly infinity money on this little guy and run away with it, and no one can do a GD thing about it, right?
Mhm.
Even the gold I personally have is at, I'm not a big baller, but is at a magnitude that I can't run out of the house with it,
Oh yeah.
right?
Yeah, of course.
And you
So,
certainly
I mean,
can,
yeah. No, the gold has certain attributes. Bitcoin has certain attributes,
and there's
and
no way I'm going to trust it to a vault.
yeah,
Absolutely
no,
not. It
no.
defeats the purpose of even having it.
Well, yes, I agree. I've always told people that look, you have only the gold that you have in your hands, just like only the Bitcoin you have on your committed
Self-custody,
behind the
yeah.
24 word seed phrase that you have committed to memory are yours. Everything else has got some level of counterparty risk, and as an investor, this is that when you go from being a saver. And
Mhm.
gold in the ground in your backyard, it's not an investment, it's savings.
Correct.
Bitcoin on a wallet, on a hardware wallet, is savings. If you want any amount of investing where you're going to get some kind of return on your money, you have to then trust another human. Now you have to take on counterparty risk of some form or another. And then that's when, life, that's when life gets interesting. And this
Mhm.
is all, again, as always, subject to the law of diminishing marginal utility. How much gold do I need in the ground? How much gold do I actually need to put out into the world so that I can draw an income stream off of it when I can no longer work to create an income stream for myself because I'm old?
Oh,
This
are you
is
going to
this is
lend
the
it to
age
the?
old this is the age old drama between savings and investing.
Mhm.
So,
And you need to do both. There's not one
of
path.
course, of course,
And I think with what we're facing today, what's awesome for most people is that it seems to me that the duration of the kick the can and the shenanigans and this, that, and the other that is frustrated, bond vigilante, stock investors, crypto investors. I mean, I can't imagine how frustrated the gold bugs are when their gold stocks have no correlation to gold price, which is
right.
hilarious and sad at the same time, right? And
Agreed.
and I can kind of explain the mechanics behind that too if you want me to get into that. But you know, getting back to a semblance of reality, a semblance of valuation, would be a good thing. Now, people have to understand that's not going to be an easy process in a simplistic way, and that's certainly not going to be one that's immediately accretive.
No, no. It's going to be very. Look. It's again, not going to be doctrinaire Austrian about this, but again, we get down to that moment when we go back to some basic um, um, education. You go back to Mises' master builder parable of the master builder going to build a house out of bricks, and he doesn't. He's gotten a false signal about the potential for economic development and his own development, how many bricks he really actually has. He gets 2/3 of the way through building the house and realizes that he's trying to build a bigger house than he has enough bricks to build with. And then now you're in the problem. And the problem then, of course, at that point is that not only did you waste all your time building 2/3 of a house that you can't finish, but now you have to tear that house apart that you built and rebuild it. And that whole process
Mhm.
is wealth destructive because wealth is not just tangible assets, it's tangible assets with time, your time as the denominator.
Mm-hmm.
And you wasted a whole lot of your denominator in this fruitless endeavor. So now you have to repair that and start all over again. And that's the parable of the boom bust cycle, writ in a very simplistic way. But would you fundamentally understand that, and you realize, oh, well, everything they're trying to do with all of this hyper financialization, you guys can't see it, but Chris has got a picture of the VIX up there, the volatility index, and I'm looking at the 5-year or 2-year chart of the volatility index, and I'm like, or this looks like the 1 month, and I'm like, that's interesting. Like, but the VIX is a complete construction designed to rob you of your ability to figure out how the fuck many bricks you have.
Dude, speaking of VIX, let's walk through this, right? Like, now, the disclaimer here is that we've got to give both the scary, bearish, gnarly analysis as well as the bullish analysis. So when we're examining VIX, which effectively is a rob mechanism for people. So let's discuss the construction of the VIX. It's effectively the rate of change of what people are willing to pay on put contracts. Essentially. It's a little more dynamic and complex than that, but we basically financialize a index called the volatility index, and its subsequent inputs are Greeks on puts for the S&P index, period. Mm-hmm. So like anything with price, it has pattern recognition that's potentially valuable here, but you have to understand the construction of it. Okay, well, we can't buy and hold VIX, can we, Tom? Mm-mm. No, therefore we have what's called roll risk. Why? Why do we have roll risk, Chris? Well, depending on what vintage of contract we own, and if we own a derivative on that vintage, that changes the way we're analyzing it. All right, so then we have got roll risk. What's roll risk? Well, that's cost and then deltas. So in futures markets, very similar to commodities, you have a relatively persistent condition called contango, where something further out costs more. That's a function of what you just mentioned, time preference and interest rates. Right. And sorry, this is long-winded. People have to really get the whole thing to understand this.
I agree. And just to make sure that please define the term delta as well. So
delta is difference between.
Right.
Difference between. Yeah. Forgive the trader speak.
I know. I can talk the jargon, but remember we're trying to educate. So go ahead.
Right. Yeah. And so basically in futures, you've got monthlies, quarterlies, potentially weeklies, depending on what kind of product it is. But the VIX is typically monthly, and usually the contracts further out cost more. Right. And then what the VIX does very famously, maybe in a more violent way than commodities markets, but typically commodities markets do this too, is getting something where it's called backwardation, where the front month, meaning the most near-term contract that is typically the most liquid, is the one that is spiking, and it's more expensive than further out in time. So those are always reversal conditions that I'm looking for. But needless to say, when we're analyzing here, we've had a really nice upward move from a 1512 low to an intraday high of 2635. Like, that's a big boy move in the VIX, right?
That's a huge move in the VIX.
It's an almost doubling, right?
Mm-hmm.
All right. So that means in real terms, people were willing to pay almost twice for puts out of the money that they were on, what was the low here in February? On February 14th. So, all right. And then we've got, let's examine the candlestick. We've got a pretty classic doji star here, which at the top or after a large move, typically that's a reversal signal because of the big wick. And then, but it's undecided because it closes in the middle and it's actually on a Fibonacci retrace, which we call that confluence. So the bearish thing is that this is just the first of a pretty big move upward.
Right.
Now, the shorter term chart I was on before the yearly, you were probably noticing the backfilling in it, right? Where it actually, here, I'll go back to it. It's actually really pretty backfilling along an internal trend line that's not on this chart. So I would actually look for a break of 22 to confirm the reversal. So essentially that that's both sides of the analysis, that either we just had a really nice move in the VIX, a really good vol event. We've also had a good correction in pretty much everything.
Right.
And then, oh, by the way, the DXY is now also in a pretty protracted downtrend,
Mm-hmm.
peaking at about 110, 111. Rates look like they've peaked in the short term. So you've just got a confluence of factors that are saying, hey, guess what? Probability is in favor of a nice correction having occurred, but there's no guarantee, right?
Right.
And
Well,
then
because what you've also done is you could have now just all you've done is reset everybody's price point,
mhm,
meaning everybody thought the Dow was overvalued at 45, but now at 42.5 or whatever close today, it's that the VIX at 26. That may be enough because the VIX and then everything has hit this long term. For example, if people are using the 200-day moving average as an indicator, when an actionable indicator for them to work on, that's a segment of the market. You have
mhm.
other people who look at Fibonacci retracements. They go, oh, look, it's a 61% Fibonacci retracement. I'm buying there. You have other people who say, I'm waiting for a an outside reversal to the upside on the daily chart. Blah
Yep,
blah
yep.
blah. They all have their different things, and if you get all of those things come together at the same time across all these different ways of looking at the markets, of breaking them down, probably everybody's going to get on the other side of the trade. You're going to have a
Right.
high probability of everybody wanting to go now long where they were short or short where they were long. And that's, and in general terms, people call that oversold or overbought.
Mhm.
And who's using RSI, who's using MACD, who's using all these things. At the end of the day, it's all just a way of somebody distilling out the price information, getting some kind of signal, and then acting off of that signal. And the market segments across a variety of things. And it does. And here's the most important point I try to teach people all the time: it doesn't matter what you fucking think about the market.
Right.
You don't matter.
Thinking doesn't make anybody any money. You trade what's in front. So
So it doesn't matter if you like Bitcoin or you don't like Bitcoin. If Bitcoin's corrected and it looks like it's going to reverse, dispassionately you should buy it. I don't give a shit if it's Lockheed Martin and it's a stock you hate, or if it's Bitcoin, the stock you hate, or it's Nvidia, a stock I hate. It doesn't matter. Like my opinion on them. If your goal is to convert assets into dollars with which for you to build savings and de-risk your life,
you got to trade what's in front of you. That's the only.
your heuristic is very simple.
I, Tom, you just beautifully articulated really fast all of the different data points or signals or indicators that one looks for. I literally only trade when all of those line up, no matter what I'm actually looking at personally.
Interesting.
And
Interesting.
and I want all of them. And it's a phrase I use called "let the trade come to you." And I've got a trading plan for bear, a trading plan for bull, and that way I don't care. And honestly, my favorite thing's bears. Oh, I already know what I see in some bullshit Web 2 screen on a bank platform ain't there, ain't worth anything, just lost 4.7% year to date, right?
Right.
Just sitting there. Even if it was in treasuries, it just negated that annual yield, right? So that negative convexity is like, okay, induce me to move. And if you appraise things like Tom just did in a really precise but articulate fashion, you're going to at least make less mistakes than you did before.
Right.
And literally they kind of pre-program, not kind of, they really pre-program people on things from the past. And I
Mm-hmm.
can tell you there is a certain duration of things from the past that has a correlative effect on the future, but that's not a forever thing. And remember, history rhymes, it doesn't repeat.
Right.
And the only thing that we can count on until this changes is that there's always going to be more fiat and a scarce quantity of assets.
Right.
So my default is I'm looking for the best window in the next 30, 90, 6 months, 2 hours, whatever it is my time preference to
Right.
convert. I've got to not buy super high, or at least relatively super high.
Right.
So I think,
And again, this is what we're getting at. We're getting at here, folks. What we're trying to articulate ultimately, as we get into the minutia of all the little stuff that we know and all of our personal inside baseball, is that what we're trying to do is we're trying to demystify these things,
correct.
show you how things happen, And ultimately, this could be because there was a policy change on the side of the other side of the world. Some bank might have blown up because of the spread got out of whack because of
Mhm.
something. But you wouldn't. The important thing here is that that information wasn't knowable except to a very few people. Meaning the people who either were trading the spread that blew up, were involved in the companies that were, that made that market or whatever. And your only way you're going to see it is after it's already occurred as a leading indicator to then the knock-on effects of other things. That's what you that and so ultimately, sometimes even knowing how these things can happen is it's also paralyzing. It's also can be paralyzing as well.
Well,
Um,
it's not too dissimilar from well, first, like the mechanical side, it should be distilled for professionals. Like this is, and people need to humble themselves to understand that, look, I have been pre-programmed and trained to overcommit n number of hours, minutes of my day to financial markets because of the illusion and the hormonal benefits a larger number gives me. Now, I don't have that reaction. I'm not built that way, Tom, but this is the way
right.
most people are built. And I'm very grateful that I'm not built that way. But back to your point, the really good example I fall back to is thinking that you're going to know some JGB spread unwind, levered this, that, or the other, yen over this carry, and be able to react is as silly and malfeasance as me saying, guess what, Tom? I have the skill set of a neurosurgeon that can read CATs and MRIs and pre-diagnose myself before I go get one. That's ludicrous, isn't it? Well, Mr. John Doe investor, it's ludicrous for you to think that CNBC, Bloomberg, Reuters et al. Is going to be remotely accurate, if they're not even nefarious, with what they're saying, and that your analysis and appraisal of it's going to be remotely close to accurate as well. Your third derivative removed from fact in that situation.
It's the Holiday Inn Express. Um,
Free breakfast.
it is no, it's the Holiday Inn Express fallacy that we can figure these things out. I did a podcast with I think it was with somebody. That's literally what I said is the end of our Holiday Inn Express politics. It's the same problem. They, what they're trying to do is they're trying to give you the illusion of information, the illusion of becoming educated about these things, and then use that as ways to trap you into false paradigms about what's actually going on in the markets, or anything else. And when the best thing for you to really do is to dispassionately just kind of step back, look at the world as it may or may not, as you may think it is. Again, as I've said, build an external model of incentives to those who have their fingers on the levers and their hands on the levers of the ability to move markets, understand their incentive structure, understand their psychology, and that's probably going to get you closer to a good result as an investor when you realize, oh, well, that doesn't make any sense. That stock went down when that whole sector went down. When I look at their financials and the company's in good shape, I'm like, well, why did the market go down? Maybe it's because somebody wanted to buy that on the cheap. Maybe it's because of this. Maybe it's because the baby got thrown out with the bathwater because something else happened in some other market on the other side of the world, and this thing got sold. And then that's when edges show up for you. That's when the opportunities show up for you to go, yep, you know what? The market can be wrong, because if the market was always right, there would never be an opportunity to make money.
Right. It would stay stagnant.
Right.
That's
Because
how,
we'd all be able to perfectly predict what's going to happen next. Well, obviously, we'd know that that's not the case.
well, and
So,
efficient market theory, like literally people, they're teaching you what they know is false.
right.
It's the same thing as signing up to take a bioweapon. Oh, I want to protect my family. I don't want to get sick and die. Cool. I agree with you, but maybe you should appraise the patents on this stuff that goes back to 2003. All you had to do was search. And hey, well, warp speed doesn't sound like the best pathway to a vaccine, does it, Tom? And that's just one of many, many examples, right, to pick on. But markets, I would argue, are infinitely more nuanced and complex than any of that, any of the medical, any of the food, and they've been designed to be that way purposefully.
Well, I was going to say, and this is to your point earlier about why history rhymes but doesn't repeat, and why the old models, and I don't even like look at old correlations anymore. Like it's part of the problem I get with I get into arguments with Dave Collum when we start talking about markets because he starts doing the historical thing, and I'm like, Dave, we don't live in that world anymore. We haven't. Now maybe we will one day, and maybe you'll be right, but as of right now, this is the world we live in, and this is the world we have to operate in. We can't be
Mhm.
right 10 years from now. We will have lost 10 years. Remember, time is a denominator in all of the value of our
What,
assets.
why do you think people do not acknowledge or process time preference? I never have, or I rarely have a sophisticated, honest dialogue about that part of the equation, which to me is the entire part of the equation.
Equation. Agreed. Again, not to be doctrinaire or Austrian about this, but these fundamental concepts, which I think everybody should learn, and then draw your own conclusions about where those things go. Whether you agree with everything the Austrians write or you don't is irrelevant. These are fundamental kind of basic ideas that aren't even Austrian necessarily, are only Austrian, but the Austrians are the ones that have really focused on this in their discussion over the last 40 or 50 years to ingrain some fundamental ideology, not ideology, but understanding and education about how humans operate. It may not be 100% correct, but it's a good primer at a minimum to get you started.
The best equation I could put that would be understandable is socioeconomics equals natural law for markets, right? So Hayek even admits this. He's really regurgitating Locke and Adam Smith, right? And they weren't the first ones to say that either, by the way. And then what does Hayek say? We have to, every generation, relitigate and reanalyze these natural truths, natural laws, universal, blah, 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 whatever you want to call them, right? They're persistent because they're a function of socioeconomics, which are a function of psychology and liquidity.
Yes. I mean, and I've had many a conversation, both public and private, with Dexter White about these things, and he's very Aristotelian about it. And like he'll go back to he'll start quoting Aristotle at me, and when we start talking about capital markets. So like these ideas are not new. They're not uniquely Austrian. They're not uniquely Lockean. They're not uniquely Smithian or Ricardoan or any of that. These are right Robespierre. Oh my God, Machiavellian. So you pick your Ian here, right? And do with it what you will. These are things about human nature and about but they are all at a certain level very much also a priori and not necessarily positives. But that's a different that's a far different conversation for a different podcast. It's just, but it breaks down to that. There's way too much positivism, and this is part of my fundamental problem with most technical analysis is that it works because, well, it worked in the past, and I've got a high correlation, and I'm like, well, that's nice. It's positivism. Positivism isn't a thing. Well, when it comes to capital markets, it's not. It's barely even a thing when it comes to science because it doesn't prove anything. It just hasn't been falsified yet.
It's just one of many inputs, is all it really is.
Right. Exactly.
One and as the markets have gotten more and more complex and more financialized, the n number of quotients you need to observe has also increased pari passu with that complexity.
Right.
So, and like, listen, folks, I happen to love, and I'm built for what I do. Like, I don't know why. I can't answer that. However, I can humbly admit that it's not easy and it's not necessarily fun to have to construct, both as a technologist, then as a strategist, then as a trader and portfolio manager, and then somehow articulate that in English, Spanish, or Italian, or French to investors in a way that allows them to deploy capital in a super hyper efficient, yet very elegant, sophisticated vehicle. It's just not easy. No. And I'd love if it was our grandfather's markets, Tom.
Right, but we're not anywhere close to that, and we're not. No, and we're not going to be. And well, we're not ever going back to that. But at the same time, I think that we are living through a kind of apogee of complexity in terms of these things, and hopefully we will. We can go back to what we're starting to see with the margin calls that we're starting to see in the physical gold market. Like there comes a point where the hyper financialization of the markets is a function of ever decreasing and now zero bound interest rates, and we are moving away from that model. We're moving away from, we're out of the, as Martin Armstrong would put it, the 5,000 year period of interest rates falling. Interest rates are starting to rise again, and we're literally and we're here documenting the weirdness of what that looks like as an entire 2 generations or 3 generations of people struggle with this, and literally in real time. And that's only adding just another layer of complexity on top of all of it.
And in my view on that side, I really bifurcate between the consumer rates versus market rates. And then I ask, well, Tom, there's a pretty huge delta between 30-year high yield and then credit card. Why is that, Tom? Can you help me there?
It's no, I can't help you there, Chris, other than to say something is not right and something is overvalued. And obviously the thing that's overvalued is the 30-year government bond. There's no argument there, because
and then even high yield was just barely I think it's less than 200 bips over the long bond, right? So, okay, wait a minute. So companies with non-positive cash flow get to enjoy round about a 6 on a 30-year borrow, but someone with a Amex Platinum that pays $750 a year for that right to use that gets charged 26.22%. Where did that rate come from?
They pulled it out of their ass.
Right. It's discretionary. I'm glad you said that, Tom. And this is where people need to understand, take advantage of the bankruptcy laws. This is such, I'll get a little dark. This is such utter predatory usury bullshit that the best use case of our legal system in the United States is to raise the middle finger and reclaim that, rebellion to tyranny is obedience to God, and default on these mother effers. because and let me provide here. I'll do a quick aside. You know what I would do if I ran Social Security, Tom? You want to know how to make everybody wealthy in one generation? All right. Everybody pays in, let's say for this purpose, $100,000 from 25 to 65, 40 year. Let's assume the natural interest rate on the short end's like 4.5% on the 2 years, right? And let's assume there's contango at 6. So if I buy 2s, 10s, and 30s during my 40-year lifespan, all right, I think around about 11 and a quarter years at 4.5 interest rate, I'm now doubling money, right? So in that instance, I'm then saying about 4x my input I'm going to end up with by the end of the time I need to collect the income. Well, okay, so I've turned 100,000 into 400,000, right? 400,000 throwing off the current 10-year, let's say at 5, right? And that pays me 20,000 bucks. I can choose to then pass that base that's going to stay in a bond pool, providing liquidity to the US government, and I can pass that to my heirs. Poof, you've solved poverty instantaneously with one strategy.
Yeah, no. The fact that I've said for many years, Chris, that Social Security is a pay-as-you-go death tax.
Well,
that's all. That's all it is.
Plus Ponzi, that's not even a Ponzi.
Well, yeah, I mean, forget how they account for the money. But I'm saying at its basic level, how you see as the person paying into it is that ultimately it's a pay-as-you-go death tax, because they're hoping and they need to have people die before they pull out of the system what they put into it, and what they put into it and what they get out of it is going to be less in terms of real purchasing power than what they put into it. And had they kept that money for themselves and just done that, or not, and this is and obvious, I can hear the libs in the corner scream, they won't save for their own retirement. Maybe they well, here's the point, maybe they can't because they're poor. And they need to invest in themselves, and they need to eat in order to make it to old age.
Well, wouldn't it be a lot better to have no income tax, no capital gains tax, and just sales and FICA FUTA, and then you just allocate it and reinvest it properly. There isn't a lack of money, but the reality of it is the system is a parasite, and I'm seeing just a skosh of discussion of solutions, a la Ron Paul. But we like the social safety net thing, my fellow lefties. That's actually one of the easiest things to solve. It's just you guys can't steal the money from the pool anymore.
Wouldn't that be nice?
Let's
Yeah.
let's lower borrowing costs of the federal government. Let's enhance our commitment as patriots to our own balance sheet by providing liquidity in a good old-fashioned bond ladder to our own freaking assets. Why has that not occurred? Because they don't want it to, Tom. Not that it can't.
No, of course not, Chris. We're ruled by communists who want to destroy,
Yes.
who want to kill us all. Like obviously, that's the model I built in my head, and that model is predictive. Sorry, it is. Like everybody's like, dude, Luongo was right again. How? Because I assume that I'm running that the world's run by communists who want to destroy us. It's
Yes.
a very simple assumption underlying it's a hypothesis, and these are my assumptions about the people who are running the thing. And I'm like, my thesis has been falsified to this point. Maybe when we're not ruled by communists anymore, I'll actually have to go out and get a real job. I'm okay with that. I've said that many times. Yeah.
Fine. Then you get to go on a meritocracy and do your own proof of work, quote unquote, right?
Exactly.
Great,
Exactly.
great. I welcome that. And if all of us have to suffer a 50, 60 point balance sheet haircut, so freaking be it. Right. With this,
I think it'll happen it'll happen in real terms, not nominal terms. I think nominal terms, we're just gonna move all the prices up to the new level. That's what I think is going to happen. But that's going to be a different story.
Well, yeah, we can't. I honestly, like, as a chaos theory fan, as much as I want, and I am a prepper, you know me, and I know you. I just filed for chickens here in Winter Park, Florida, to have that in my backyard. That's what level of prepping I'm on, Tom. And I think it's what I would call black pilled waste of time to try and solve for a end of fiat completely, right? Because like you said, it's not just going to come tomorrow. And arguably on a percent terms on a log scale, it already has ended, right? Since 1913 and then since 74, what is the percentage loss of purchasing power? Well, shit, it's over 93%. So it's already failed, right? So trying to have, I'm max long VIX or I'm max long put skew, which means I'm buying leaps way out of the money, way far out in time, so that I can make all this. Well, guess what, Tom? Aren't those denominated in fiat? So if you're trying to bet on the end of the world, you can't even bet on the end of the world.
No, you can't. No, you can't.
So why bother?
No,
why bother? I mean, and that's how the regression back to trade what's in front of you resonates over and over and over again. Price is opportunity. You are the risk.
Mm-hmm. No, it's a very important point, Chris. That you have to live. There's the infinite gulf. I've said many times. There's the infinite gulf between the world you want and the world you've got. And you can imagine the world you want, and you strive for the world you want. And that's what we do as human beings. Every day we get up and we try to turn what we want into what will be, right? But then there's that whole problem of, well, this is how it actually is.
Correct.
So how do you get from turning what you want into what will be when how it is getting in the way of what you want? Well, that's when you have to knuckle down, accept the reality that you have around you, because you can deny it all you want, but reality is that which, to quote Philip K. Dick, when you stop believing in it, it doesn't go away. Now, now that you're dealing with that mindset, now that you've humbled yourself in the face of all this, because you've got all those other people out there who have a different reality than you, who trade differently than you, see the markets differently than you, value assets differently than you, and you have people who are actively trying to kill you and take your stuff because, to these globalists, it's a 14-year-old game of D&D. You're the mob and let's kill them and take their stuff and then go, oh, look, we're richer now. And we just made level 2. Like when that's that's the paradigm you're operating in. Well, then you have to operate within that paradigm if you want to, in any way, manner, shape, or form, turn what is into what will be. And You got to submit yourself to that as much as it may pain you to do so. Now, you can make it as simple for yourself as possible, but having having an understanding of how markets move rather than why they move is,
Mhm.
I think, ultimately the best advice we can give any of you. And that's part of what I know I do every day when I get up. I know that's what you're doing because obviously you're the one who brought the friggin' concept up. And all we can continue to do is continue to try and sharpen everybody's understanding of how these of how markets work, and then they can make some more rational plays, and maybe yes, act a little humble and give it to somebody else. Remember, Chris, I tell you all the time, I tell people all the time, I don't trade. People are like, you must be rich. You're like, you know all this stuff about markets. I'm like, fuck, I don't trade because I, unlike you, can't act. I'm not
It's not
built to
easy.
trade. I'm not
Almost
built
no
to trade.
one is. It's kind of terrifying how lonely it is. And
Mm-hmm.
then speaking like this isn't the best like sales policy, right? Like not many people like to be told like it is. And our team, we're a little bit senior in terms of operating hedge funds, in our late 30s to mid 40s. But there's an elegance to truth. And we don't, the more we're transparent and the more we're truth tellers and the more we know nothing, then what ends up happening is I'm not searching for comfort. I'm not searching for certainty. You know why? Because there's no such thing.
Exactly. Exactly. There isn't. One of the big I've used this metaphor before just to remind everybody. We'll pull it into a different idiom to get people to understand. In a former life, I was a chemist, right? And in chemistry, the first thing you learn is, okay, so we're going to create these reaction mechanisms, and then we're going to solve for the concentration of this species versus that one, blah 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 blah, and then what's going to be the final concentration on the other side. There's a big assumption in all of that math and all of that those reaction mechanisms and everything else, which is that when we're done, the system will be at equilibrium. But there is no equilibrium unless we're at absolute zero, meaning there's no transfer of energy from one species to another, or unless you're talking in a very, very statistically average thermodynamic sense over hundreds of billions and googolplexes of molecules. The point being is that the markets everything is constantly in motion and seeking a different, seeking comfort, but there's somebody else jostling them over there and keeping them out of their comfort zone. Molecules are bouncing around, in your cup of coffee, they're bouncing around all over the place against each other. That's what temperature is, by the way. So the average kinetic energy of all the molecules in that particular sample. Therefore, the metaphor is valid. We're all bouncing off of each other, trying to figure out how to find our little place of heaven and find our little node of stability for ourselves, and knowing that it's a chaotic, dynamic world that we're constantly having to read and react to. To put it in more bluntly terms, we are defensemen in the NHL, constantly reading and reacting to where the puck is.
Well, I want to come out fighting, first 3 seconds of the match. um,
then you're the oligarch who's then going to tilt the game by beating the crap out of the other team and then not giving them the ability to read and react. That's the extension of that metaphor.
I'm going to pretend you didn't call me an oligarch.
I'm kidding.
But I think you're articulating kind of the greater resounding truth with your chemistry example, is that everything's perpetually in motion. And then from a data perspective, I would challenge people to look into ontology, right? And that's a whole different type of science and analytical field that's really overlooked or underappreciated. And and it's not on, like, people don't have, this is why the system's designed like this: usury, parasitic, you useless eaters are going to transfer your wealth to us. It's set up so that you really don't have the time, right? Which is good for me because it's why I have a job and to provide good service and value add. Fine, but I'm your listeners are taking the time to listen to the wisdom that you've been spouting your entire life, and to try and get an edge for themselves. Hopefully, at a minimum, it's psychological and then ultimately financial as well, because you can't expect one without the other, right? You can't expect wealth until you are of sound mind, right? Everybody who has made it in that low probability environment is mostly luck. And a lot of the baby boomer generation and they have collided with this giant money printing thing where everything appears to be up, but like real estate net of costs is not up in real terms. The stock market in real money terms is not up off its 99 high. Like you have to appraise these things in reality, not in just this illusion of nominal terms. And then the less you assign your happiness to whatever that value is on an intraday, second, minute, hourly basis, the more you get back your time preference.
Yes. Yes. Yeah.
It,
Which
it,
which again gets us right back to the things that we've talked about in your previous appearances here on the podcast, where we've talked about these things purely in terms of how do we maximize our real wealth, which is in quality of life rather than number go up. And number go up is only matters if it can be translated into things that make emotional stability go up and happiness go up. And money doesn't necessarily bring you happiness; it brings you the potential for predictability.
well, I think it's also time and freedom as well,
Yeah, well, that's predictability.
right?
Freedom is ultimately knowing that predictability is that tomorrow is going to look a lot more, kind of like today, and therefore I have going to have the time tomorrow to devote to the things that I want to do.
Right. And the whole system was set up to rob you of that, right? It's USA Inc. You know the Maritime Admiralty law where we're debt slaves by our prisoner number called the Social Security number, right? That's literally what it is, folks. USA Inc. There's a date where that started. The city state of Washington, D.C. was formed, and we basically lost our country at that point. And then more purposefully, no value-based monetary system, a predatory, over-financialized, usury-based credit and money system. And then people are then not be able, it's so foobar, so hard to navigate, so frustrating, and robbing wealth rather than building wealth that people don't have the time to go, hey, Tommy, what's money?
Yeah, I
They're
know.
not even asking those questions.
I know. That's ultimately, I think, what the Great Awakening is that's what the Great Awakening actually is, and we're having a Great Awakening now as to how the system is designed, and that and you can see it reflected in how people have reacted very violently. For example, to Zelensky's behavior in the White House the other day, and then the subsequent reaction of the European Union and the United Kingdom, and saying, "Oh well, you don't. How dare you Yanks not realize that you're supposed to be our gendarme to go and kill the Russians that we asked you to, that we demand you go kill?" And like, we're not doing that. But you have to continue to subsidize our social welfare system and our 35-hour work weeks and our 6 weeks off in the middle of when and our confiscatory taxing system and our regulations and everything else. And we're like, yeah, no, we work like freaking dogs at 3 jobs, and our seniors are eating dog food and everything else, and you're telling us that we have to continue to fight and die for this and pay for it. No, I think the answer to the question, I think the answer is to that is go fuck yourself, and we'll
Yep.
call it even.
Mm-hmm. Oh, by the way, is that just to feed the beast of unelected bureaucrats in the EU? Oh shit.
Oh,
And then
the deuce you say.
and then one of the things that I pointed out, because I what I'm dealing with on a day-to-day basis is like basically I'm like a punching bag for a combination of high net worth family office investors and then institutional investors. Everybody has the same psychoses, right? And what they are, I'm like a punching bag reacting to, oh, Stormer said this, oh, they said that, and blah blah blah. Well, they can't look above the apparatus and understand who's pulling the strings. And then I go, hey guys, did anybody notice that every unelected EU based official and elected prime ministers happened to put out a tweet that was word for word the same thing?
Yeah.
Now I'm a bell curve probability distribution guy, but there's no way that occurred without being directed to do that.
Yeah. I saw a video earlier from Libs of TikTok, that Chuck Schumer, Elizabeth Warren, and Cory Booker all came out with the exact same statement in response to Donald Trump saying we're going to get prices down. And then they literally said the exact same thing with three different inflections of voice. And I tweeted it out with, a Jew, a harpy, and an idiot walk into a bar.
Yeah.
And it's right there on my Twitter feed, folks. And it's so obvious. It's even worse than that very famous viral video from 2016, 2017, where they all of the newscasters giving us the exact same script to read from.
Trump's a threat to democracy.
Whatever the hell it was. It was Trump is terrible, and we in the media are not court stenographers and don't parrot each other on a daily basis. And they're all saying the same thing. It's literally like the scene from Monty Python: The Life of Brian. Yes, we are all individuals. I'm not.
Gawain was the Green Knight. I love Monty Python. I miss good comedy. I miss good anything. Like I had a conversation. This is a big non sequitur, but I had a conversation with the guy who owns the gym I work out at, and we were talking about funk and soul because I'm teaching my kids as I drive them to school in the morning at 7:30 when I'm in town and not on a work trip. Like, okay, guys, here are your funk folks, and we got to the Spinners and a song called The Rubber Band Man.
Oh yeah, Rubber Band Man.
Yeah, so my kids, 9/11, because no reference to the Twin Towers, folks, for all you super cute people. I didn't mean they're 9 and 11 years old.
They're 9 and 11 years old.
and they liked the groove, and then how the chorus was just so catchy, and the nice syncopation. Then there's a modulation where they jump again. And all of that is inherent to something quality. It tells a story, and it's got hook, groove, soul. And I brought that up to him. He's like, well, the reason we don't have that, Chris, is because music is a byproduct of the state of our society, and the state of our society is dog shit. So we get dog shit music.
It was funny. I had a similar experience the other day, and it was interesting that when Bill Murray was on Joe Rogan the other day, he talked about this in terms of John Belushi. I just rewatched the Blues Brothers the other day for the first time in 20 years, which is a great homage to all the great blues artists in Chicago. And because that's primarily what that movie's about. And it's also about, look, they're on a mission from God. Bad people were sent on a mission from God to save an orphanage, right? And in the process, also save the souls of all these great musicians. And how the state was like, no, you can't do that. No, we can't have you doing that, right? And there's something really beautiful and elegant about the Blues Brothers in that way. And then Bill Murray was talking about it, when he was talking about Bob Woodward. That's this famous, now relatively famous clip from that interview where he said he read 5 pages of Bob Woodward's Wired, the book about John Belushi. He's like, and he threw it across the room and then wanted to set it on fire and then go beat Bob Woodward up for all the lies that he told about his friend. And he's like, people don't realize today, Murray was saying, that we have a restoration of the blues today. There are houses of blues all over America for blues artists to go and play because of fucking John Belushi. And you're like, I never, and he's like, it's true. It's real. I'm like, that's what we're missing. And that's we all owe them and it doesn't matter to the fact that like we get to listen to Donald Duck Dunn play the fucking bass for 2.5 hours in that freaking movie. It's unbelievable.
The bass. Well, and then you bring forward like the Chicagoans that I'm a big fan of, not to forget anyone, but John Lee Hooker and then Howlin' Wolf. I freaking love Howlin' Wolf.
Well, Johnny Lee Hooker's in the movie.
Correct.
Right. And so is Ray Charles and Aretha Franklin and Cab Calloway. And and it's funny, I was watching it with my wife and she didn't realize she didn't know this. And she's like, and she didn't realize that they were sandbagging us for Cab Calloway throughout the entire movie because, he plays Curtis, the old caretaker. And then he goes out and he does Minnie the Moocher. And you're like, and like, I knew it was coming because my dad taught me that music when I was a kid. Right. He taught me big band and showed me I heard all of that stuff. My father had very eclectic taste in music. And so it rubbed off on me, even though I went off into like prog rock and, and all this other stuff that he hated, but it doesn't matter. I also still had an appreciation for all that stuff too. I would listen to Benny Goodman and Stan Kenton right next to listening to freaking Black Sabbath and Rush when I was a teenager. This is the way.
Buddy Rich to Tool,
Right. Exactly. So I
Okay.
have,
Yeah.
so it's the same kind of thing. So it's a very similar thing. I've been trying, and like every once in a while, I take my daughter out to a concert, and I took her out to see Pat Metheny. She didn't understand a word,
It's
a note of
fantastic.
it, but she was completely blown away by it. And I went, well, I took her out to see something else recently, but just taking her to see Pat Metheny recently over at the Performing Arts Center, one of the few decent things in the city of Gainesville at this point, was eye opening for her to watch him on stage by himself, just unbelievably just crush it, for 2 hours. And
He
it's amazing.
virtuoso isn't even, and I'm a guitar player, and
Mm-hmm.
before I switched to history track and masters, I was in the music school,
Mm-hmm.
and Metheny, um, John Laughlin, like these guys
John
are
McLaughlin,
still
yeah.
alive. Yeah, he actually taught my jazz improv class at Emory
Right.
University. Some
Were
point.
you were UM?
Emory in Atlanta,
Oh, okay, okay,
and
right.
then
Oh,
I got
so
to play in a
McLaughlin, not Matheny.
no, not Pat.
Okay, right.
Yeah, yeah, John.
Okay, sorry.
And McLaughlin, like they're both. What I equate them because they're like contemporaries. They're both
Sure, no, they are absolutely.
virtuosos. Matheny's a little bit maybe more dynamic in my
Yeah.
opinion because he can touch a lot of different modalities.
Mhm. I
But
agree.
where I was going with this is like my what I got to experience being a blues fan because of my parents, grandparents, etc. I got to play as a white boy in blues clubs in Atlanta
Nice.
as a guitar player, and like what and no one now there's very little of it, even though Murray pointed out and you're pointing out there's a few venues trying to have a
Right.
renaissance. But it's sad when you look what's part of our heritage as Americans and
Hmm.
what should be a natural call it asset class within music, which is blues. Blues and jazz is the American art form, period.
Agreed. Agreed.
And it pains me very much so that for whatever n number of reasons, it gets overlooked, and what's distilled and put to the public is just part of pre-programming.
Yeah. No,
Operation Mockingbird, blah 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 blah.
it is really sad. I didn't know that. I didn't know that you that I didn't know you were a musician, Chris.
But
That's great.
no, it
I'm
doesn't
sitting in
usually
my
come up.
office with
Yeah.
I'm sitting in my office with my drum kit. The bass is on the walls. I'm a miserably bad guitar player, but I struggle away every once in a while, like continuing to like get there slowly and actually almost be able to play at a reasonable level. I'm a good enough bass player and and a passable drummer, but the guitar is just this thing that is still like it doesn't make any sense. I've been sitting here playing with my pick that because whenever I'm like sitting at my desk now, I have 15 minutes off. I just kind of sit back and I pick up the guitar and I do some finger exercises and I work on some stuff and I'm like trying to teach myself how to learn play with the pick because I'm a bass player first, right?
Mhm.
And I never really learned how to play with the pick. Playing the bass with the pick is wrong. It's
No,
just
no. I
wrong.
mean,
It's just wrong.
if I get it for like Lemmy, Motorhead, right?
Yeah, yeah. I mean, metal players are different.
Right. And they're usually virtuosos also.
Well, I
Um,
mean, it's just, I mean, like, I'm not going to, who's going to get Lemmy, Steve Harris? Like, there's plenty of guys who play with a pick. I mean, who are fantastic and guys I really respect. It's just not my bag. Like,
mhm.
to me, it's still, I watch, it's like
I want to play like, Bela Fleck and those guys, you know.
good luck. Like, I
Well,
know. Like, I was like, you should talk to Chris Marcus over at Arcadia Economics because that guy can play. Like, oh
mhm.
my God, is that guy good?
A
And
lot of my band stuff still on Spotify that
yeah,
I can shoot you post.
so we should, but yeah, one of these days we should probably get, me, you, and Chris together in a room together. Right? Just like do a thing. It'd be fun.
Mhm. I'm always open, and I'm pretty fluid with most instruments. I'm best at guitar, but once you kind of master guitar, and then you can play the drums, then bass is like its own animal in between those because it's got to be somewhat percussive. You've got to understand how to sit back
Yeah.
and get in the pocket. And if you don't have the pocket, there's no song.
No, there's no
And
song.
like this is all frequency, which is the same thing as price. Like frequency subdivides in
Yep.
fractals, right? And this is why it was easy for me to get into what I do now, because when you understand energy and then music, both are frequencies and how
Yes.
they contract, it's pretty easy to understand how prices expand and contract, right? It's
Yes.
not, it's tangential.
And again, we start talking about pocket. We start talking about time, subdividing time, looking, yeah, and it's all the same. It's all the same set of skills.
Right.
Truly
And
is.
the circle of fifths like proves the existence of God kind of thing. That's like how like dialed in.
Oh my God! Is
Yeah.
Dexter gonna love this podcast.
Yeah, I mean,
Yeah.
I know that's like another guy. Yeah,
That's another 2 hour
right,
conversation.
right.
So part
But it's
two is going to be
super.
Chris and I talking about the circle of fifths. Um,
What beautiful is the science behind it, right? And
yeah,
like,
yeah,
you know, you can be, I love being a skeptic. I'm a contrarian, a bear. That's my natural setting. But the beauty of some of these truths is
yeah.
that they are truth like that. And then it's such a wonderful place to be in when you can comprehend that.
Yeah, it is. It is. Well, how about we leave it there, Chris, and
Yeah.
we stop boring the people about our geeking out about music. But no, I mean you're absolutely correct, and it's these things are all connected, and there are cycles and rhythms to all of these to all of these disciplines, and they all overlap at a certain level, and keeping that in mind makes it easy for you to apply lessons in one area of your life to another area of your life, and then use that as a means by which to build a model that makes sense to you and how the world actually works. With that said, give everybody the contact info, whatever. Give it your spiel, do the thing, and we'll get out the door.
My spiel is we run a fund that you're welcome to invest in next to our money. If it doesn't make sense for you, cool. Happy to make friends. HyperionDecimus.com is the site, and you can email info at HYPERIONDECIMUS.com. Someone from our team will get you to me, and that's the extent of my spiel.
All right, that sounds good. And my spiel, as always, is TFL1728 on Twitter and Patreon/Gold Goats and Guns to do the thing. You guys have heard the spiel before. So, with that said, Chris and I are out. You guys be well. Take care. We'll talk soon. And keep your stick on the ice.